But there's so many wonderful people out there, and there's so many awful people out there, and there's signs frequently like flags, particularly over the awful people. And generally speaking, those people are to be avoided. It just the amount of misery you bring into your life by trusting some awful person, and the amount of felicity that you can bring in by making the right business associations. Look around this room, and there's some wonderful people who have created some wonderful businesses, and their customers can trust them, the employees can trust them, the problems can trust them to be fairly faced and reasonably solved. And those are the kind of people you want to, and people will take their promises seriously. I had some experience recently with a company, and they have their brand on a particular product, and somebody invented a better product in the same field, and they're taking their brand off their product. If it isn't the best, they don't want their brand on it. People who think like that frequently do very well in business, and the flags are flying. I mean,
it's like they got a sign and it just says jerk, 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 and then you think you're going to buy the business and they aren't going to be a jerk, anymore. I mean, it's
right. Right. Opportunity cost is a huge filter in life. If you've got two suitors who are really eager to have you, and one is way the hell better than the other, you do not have to spend much time with the other. And that's the way we filter stock buying opportunities. Our ideas are so simple, people keep asking us for mysteries when all we have is the most elementary idea.
The first filter we probably put it through is whether we think, and we know instantly, I mean, whether it's a business we're going to understand, and whether it's a business that if it passes through that, it's whether a company can have a sustainable edge, and that gets rid of a very significant percentage of the things people have. They always want to tell you some story or anything, and I'm sure they regard me and Charlie as very arbitrary in terms of, in the middle of the first sentence saying, well, we appreciate the call, but we're not interested. I mean, they just think if they explain something enough. I get letters on this all the time, but we really can tell in the middle of the first sentence usually whether those two factors exist. And if we can't understand it, obviously it's not going to have, we can't make a decision as to whether it has a sustainable edge. And if we can't understand it, we very often can come to the conclusion that it's not the kind of business where it will have a sustainable edge. So 98% of the conversations we can end, in the middle of somebody's first sentence, which of course goes over very big with the caller. And then sometimes if you're talking about an entire business, we can tell by who we're dealing with whether a deal's ever going to work out or not. I mean, if there's an auction going on, we don't want to. We have no interest in talking about it, and it just isn't going to. It isn't going to work. If someone is interested in essentially doing that with their business, they're going to sit down or want to renegotiate everything with us all over again after the deal is done, and we're going to have to buy the business 2 or 3 times before we get through. And you just see all these things coming. And on the other hand, we've had terrific experience basically with the people we have associated with. So it works. It's efficient. We don't want to listen to stories all day, and we don't read brokerage reports or anything of the sort. There's other things to do with your time. Charlie?
Yeah. Another filter that Warren was alluding to is this concept of the quality person. And of course, most people define quality person as somebody very much like themselves.
Identical, actually, is the word you're searching for.
You have both talked today about the shrinking universe of stocks you could purchase, less margin of safety than ever, and a higher opportunity cost. And you've also talked about looking to potentially purchase your great companies that you already have at reasonable prices. And so I wonder if by talking so positively about some of your stocks, in particular Disney, such as in the 95 annual report when you talked about actually telling everyone that you were buying more shares on the open market, and again at the 97 meeting, at their meeting when you talked about maybe not selling the shares, those were both opportunities maybe when Disney may have dropped because of such things as increased debt or even people's concerned about the OVIT's compensation package. And I just wonder if that may hurt your ability to buy these great companies at reasonable prices by talking so positively about them, when in fact maybe you could buy them at lower prices when people get irrational.
Yeah, you're saying that, which I probably agree with, that if we would say the world is going to hell at Coke or Disney or Gillette, we might be better off in terms of being able to buy more stock. But, I got asked a question at Disney and I answered it. And that's my general approach, that I think it's usually a bad mistake to sell your interest in wonderful businesses. I don't think people find them that often. And I think they get hung up if they sold them at X, that they want to buy them back at 90% of X or 85% of X. So they'll never go back in at 105% of X. So I think on balance, if you are in a business that you understand and you think it's a really outstanding business, that the presumption should be that you just hold it and don't worry. And if it goes down 25% in price or 30% in price, if you have more money available, buy more. And if you don't, so what? Just look at the business and judge how it's doing. But there's no question. I mean, we try not to talk very much about the businesses, except maybe to use them as an illustration in a teaching mode or something. So we're not touting anything. And I did try to stick those precautions in when I do talk about them as being wonderful businesses, so people don't take it as a unqualified buy recommendation or something of the sort. But we won't try and put any spin on it when we're talking about business generally. We may not talk about them at all. If we're buying something, we might be, that particularly if no one knows that we've been in that stock at all, we might be somewhat quiet about the fact. But we don't want to talk down something in order to buy it. Charlie?
Jerry Newman, as I understand it, didn't like Ben Graham giving all these courses explaining what Newman and Graham were doing. But Graham's attitude was that he was a professor first, and that he made just slightly less money by being very accurate in what he taught. Well, so be it. And I think it's fair to say that Warren has assimilated a bit of that ethos. And I think it's all to the good. And if it costs us a tiny little bit of money from time to time, there are probably compensating benefits. And if there aren't, it's probably the right way to behave anyway.
Charlie, if you were in a less charitable move, I point out I didn't behave that way till I got rich. Actually, I used to teach a course at what was then the University of Omaha, and we'd use all these current examples, and things were so cheap that nobody paid any